Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your metals market update for this Monday, the 7th of August, 2017. We're about 1:55 p.m. Central Daylight Time. So we have a market that while you're seeing the market down 70 cents in the gold, it actually settled one tick higher at 1264.70 on the day. So we had our first bounce in 5 days, and it's a feeble bounce. But the dollar is a bit lower. You're up in the euro. The yen is holding on close to unchanged on the day, not doing much one way or the other, or the pound. Very frankly, it's one of these strange Mondays where, other than a couple of agriculture markets that moved around, you're not getting an awful lot of movement one way or the other. And that happens from time to time. You are getting a little bit of a bid in the bonds and the notes. We'll need to see more information about inflation to know if they're going to get derailed. In Abu Dhabi, they have a 2-day OPEC meeting that ends on Tuesday. So what they're going to come out with has to be a statement that says they're going to be more compliant, they're going to do blah, blah, blah. They got to jawbone the market up. Maybe you get back over the 50 level on that in the crude because of it. I wouldn't think they come out with anything bearish. In looking at the gold chart, on the weekly chart, the 18-day average of closes, come on, you've just been hanging around this number, and the question is, which way does it ultimately go? Does it break out to the upside or downside? You can argue over and over, as I've done with you, that 1295 is a trade top right through here. The current trade bottom's around 1204. If you take the two and you subtract them, midway through, that's right where you're at here in the 1255 level. So this market is hanging in the center of that trading range, trying to figure out what to do. On an area chart of just closes, the market had gone from 1279.40 to the low close on Friday of 1264.60. As I said, it closed up one tick today. When we look at a daily bar chart, we have an inside day in a market that's been basically trying to drop, and you get to see how the swing line is. You got a higher high and a lower low. Do you see that? You're not trending. I then look at the moving averages, and the 100-day average has been offering the first level of support. I'm not keen on that. I'd like to see the 18 get over. If I'm going to be a bull, I want this market to see the 18 get over the 100. If I'm going to be a bear, I want the two to get close to kissing here, and then for that 18 to fall off as prices slip back under. So you're at an important area. It's just taking time for it to decide what is next. In terms of the upper Bollinger Band in black here and the bottom one here, they're not in play. And when I say they're not in play, it simply means, barring some world event, what's going to make them get up to 1288.90 or 1229 immediately? And I don't see that right now. The market did have another bullish event take place with the sanctions on North Korea, and they're not being stopped by Russia or China. So now North Korea, over a long period of time, could lose up to $1 billion of its $3 billion in revenue that it gets from its exports. The problem is one of compliance, because China, which went along with this, has been notorious in turning the other eye. In fact, on the there was a big article today in the Globe, if you read the British papers, and fishermen in North Korea saw the immediate impact of this, with fish prices fell by 1/3. So they were going to run over the Chinese border and sell their meat. Well, in theory, their fish. In theory, that's not supposed to be. But the story says that it takes so long to get all this through China and get everything set up as to what can and can't get done, that this is just the way it operates for a long time. So just telling you another story, but that's where you're at right now. Momentum, you lost the embedded reading in the gold. So when you lose it, you typically go to the closest of the 100-day or the 18-day average. Doesn't mean you can't hit both, by the way. You hit, when it happened, the 100, and the market's trying to hold that at this point in time. When we come to, yes, I got them back, GLD, the ETF, you've got a higher high and a lower low, so you're not trending. You have upside bias because the market is over both the 18 and the 100-day average, and they are coming, just like you saw in the futures, they're starting to kiss each other. What they do here is going to be super important. Momentum is overbought and pointing down at this point. In GDX, you have a market that's got downside bias because it's under the 18-day average of closes. Momentum is clearly pointing to the downside. You're not trending because you have a higher high and a lower low. And unlike the GLD, the market is not seeing these moving averages kiss. This is still a more bearish chart than the other. When we look at the gold-silver ratio, you had your correction from roughly 78.5 to 75.40, and you're back up at 77.46. Now, as the numbers go higher, it means that silver is weaker than gold. You need more ounces of silver to buy 1 ounce of gold. When we come to the silver chart, you get to see this instantly. Lower highs, lower lows, bearish. The market's under the 18-day average of closes, bearish. Momentum pointing down and not oversold, bearish. Should this market decide to let go, 1582.5 roughly is a definitive target if the market wants to break down there. Now, the copper market got a nice bid and held on to it literally all day today. You have higher lows, higher highs. The momentum of the chart is a bullish embedded reading. It's still looking good. If the market wants to extend the rally, you possibly have the upper Bollinger Band there. If the market's going to break down, you have to lose this embedded reading, which requires this 88 reading to close back under 80. In the platinum market, you have an embedded reading. You've got higher lows, higher highs. You don't quite have that bullish moving average picture I like when you got the shorter-term 18-day average over the 100, but that's not stopping this market. It's looking quite friendly on the chart as the platinum market completed a downside maneuver today. You tell me the number it got down to, and then from it, once it hit this 18-day average, that market rallied $18. But again, this is a market that was working off a condition here where both numbers were over 80. Both were over 80, but the day before they weren't. They were just overbought. The overbought condition created a break in the market. It worked its way through it, and now we're here. What could you end up with? Well, I don't think you can end up with a trend right here. You certainly can end up with upside bias as you have, but you got a lower low and a higher high. That's just not going to be a trend anyway I look at it. The dollar index is losing its embedded reading. I think it might make a run for the 18-day average to just neutralize everything that's going on. We don't have a trend. We have a lower low and a higher high, but when you lose that reading, you often make a run for that 18-day average of closes. So when I put it all together, an interesting day, but pretty boring in reality. You're not doing an awful lot of things. The market might make a run in the yen a bit lower before it's down. The dollar a little bit higher before it's done because of the embedded readings. The gold market sort of stuck right here, but getting ready for a move. Silver under some bearish influence. But we're going to be talking about all that because we cover in our writings from the Linn Group, and Linn and Associates, I should say. We changed our name in June of last year. We've got all these different parts to it. And as we get these different parts and we write about them, you get to choose which stories you'd like to see. Now, it's a trial. This is for our clients, and it is free to our clients. It is not free to the general public. You can try it, and maybe you should be trading or buying my own research, and I throw that in with it. You can call us. You can go to our website to get on it. You'll see the different categories. You can click right up here, and you'll see an icon if you're watching me on YouTube. Click it. The form will appear to get everything. Or underneath us on a series of websites, it says, click here for Ira Epstein's information. Our free offers, basically. You have a great day. I'll see you at the end of the day in my financial video. Have a good trading day.